Welcome to the March 25th, 2024 Advance Report from McGowan Group Wealth Management clients and NetWorthRadio.com listeners. All-time new highs. 2024 has been a year of many all-time new highs, and this week was no exception. Boom! That's a huge spike right here. What happened? Well, actually, this spike began right here. This is the Federal Reserve announcement. S&P 500 also made two new all-time highs this week, and that's happening across the equity markets as we speak. So, what's driving this? It was the Federal Reserve corresponding exactly to that big spike. It was Wednesday afternoon. Federal Reserve releases their projections. And when they did, all of a sudden, Dow Jones Industrial Average spikes to a gain of 400 points, adds nearly another 300 the day before, comes within spitting distance of 40,000. Harken back to the beginning of 2023. We had a huge correction. S&P was down 18% for the year. NASDAQ was down a third, right? Over 33% for the year. That was a difficult time period for investors. McGowan Group Wealth Management is a team of 10, the team that cares. And what were we busy doing? We were busy positioning the portfolios for recovery because the data we had said corporate profits were going to begin to rise. Now, we do separately managed accounts. That model is applied across the clientele consistently with best execution. I'm Spencer McGowan, your financial weatherman and president, McGowan Group Wealth Management. You can contact us at NetWorthRadio.com to set your time for a brainstorming session. Now, those portfolios were well positioned for this run-up. It's a commitment to owning great assets that pay real cash flow. I want to walk through the drama of the tech stocks. I mentioned this huge decline of over 33%. This was a very difficult time period, especially December of 22, to begin to pick out the very best companies that were at bargain prices. We know that now in retrospect. What's the total return if you go back 3 years? Well, you had a nice run in 21, but the NASDAQ itself, NASDAQ 100 tech stocks, annualizing at 12.5%, total return of 42%. However, you could say, well, I just should buy that index. What would you have done if you lost a third of your capital with virtually no income? That's a very difficult proposition. It sounds good when you're like right here. However, we know in retrospect, this is a good time to raise tactical safety, good time to put it to work. And if you were dependent on that index with no guarantee that it's going to come back, that is a very difficult premise for investors to execute. Now, big news this week. Well, the energy index, the S&P Energy Index, XLE is the symbol, pulled ahead of the S&P 500. Now, S&P is up an impressive 10%, but the energy stocks have begun to pull ahead of that. They're up 11% so far this year. Will that continue? Well, at 6 or 7 times cash flow, that industry may be one of the best bargains in the market with high dividends, and that's a part of the model portfolios as well. Here's a question. Wow, gold is hitting new highs. Is it time to buy gold? Well, I have something to point out on this chart. You see this time period right here. This is 2011 through the present. 2011, gold hits a big new high because everybody thought there'd be inflation because the Federal Reserve printed a lot of money, which they did. Gold hits, at that point, 1,900 per troy ounce. Look at this. That is a long period in the desert with no income. Now, let's adjust this for inflation. What's it worth in today's dollars? Because gold is supposed to keep pace with inflation. If we go back to 2011, that's a long time period for about a $300 per troy ounce gain, about 15%. But that time period with no income, that's a hard premise for investors to stick with. If you're retired and you need income, doesn't really work. Let's adjust this for inflation, and you get about 1,200 per troy ounce equivalent from that high back there. And so it has not kept pace with inflation since right here. And that was also true from 1980 to 2002. 1980 inflation, gold hits 800. It was 250 by 20 years later. Well, prices had doubled, yet the capital was reduced by 2/3. It doesn't always work, and it doesn't always keep pace with inflation. Federal Reserve, what did they say that pushed the equity indexes to new highs? They said in their all the suits get together and they have a consensus on where they ought to go, 3 more rate cuts this year. That would be June, if they do it every other meeting, June, September, and then December are the anticipated rate cuts, taking the pressure off the financial markets and moving the other direction, which makes net present value of future cash flow worth more. McGowan Group Wealth Management, serving affluent families right from the Crescent in Dallas. We look forward to updating your plan for 2024 at networthradio.com. Contact us there. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.